Reaction is Goldman Sachs' Apple analyst, Rod Hall. Rod, always good to have you. So give me that reaction. What'd you think?
David, yeah, it was about what we expected. Incremental updates to the iPhone. The watch, I was a little disappointed they didn't do anything more with the sensing technology, but the larger screen's nice. But it pretty well as we expected on an off year. They redesigned the iPhone last year. This year, not as big a redesign. I guess the main surprise coming out of this, or the main new information coming out of it, is what the carrier subsidies are going to look like in the U.S. Those do look pretty aggressive, a little bit better than last year to us. And of course, we know last year that helped to drive some sales. So, we'll see how that plays out this year.
All right. So what does that all mean to your sales forecast, particularly that increase slightly or more aggressive subsidy you referenced, as well as growing adaptation of 5G, I guess, which Tim Cook would certainly tell you is a long way to go, but is going to be something that perhaps fuels more sales than some may anticipate?
Yeah. I mean, we've never really been big believers that 5G itself fuels much in the way of sales. Some of the U.S. carriers seem inclined to try to increase 5G phone penetration to utilize new spectrum that they've got. But, from a user experience point of view, things don't change all that much. From a sales forecast point of view, we're not changing anything. We still think that, it's going to be challenging for Apple to make street forecasts for the December quarter. However, given Delta, reopening, supply chain shortages, all the puts and takes, all the complexity of the back end of this year, I'm reluctant to, try to get too aggressive on thinking one way or the other on it. We're just looking for the data, following that data as it comes.
For a hardware day, Rod, it was hard not to notice them lead with Apple TV. There have been some reports that they're looking to boost their content aggressively. We think we know that churn on Apple TV is well above the industry average. What do you think their ambitions are on that front, and how did it relate to yesterday?
Well, they've got high ambitions there, David. We know that. They're spending a lot of money on content. We've published repeatedly on Apple TV and the cost there. The amortization of those content costs, we think, is ramping up to pretty high levels. Probably, if you could see those margins underlying the services margins, you'd see some drag there due to all that cost amortization. But then again, they've got some great shows like Ted Lasso and so on. So they've made good progress, I think, from just a show's point of view. But those costs are still pretty high relative to the revenue. And like you say, the churn seems to be pretty high.